Awesome. Okay. So I just realized my mic was muted. So we are going to start over. So gives me a chance to do it twice. So awesome. So welcome back to another episode of Off the Record with KyleSellsBiz. You're truly, I'm Kyle Griffith. And took a little break the past few weeks. Been busy working on different initiatives, working on deals. There's a lot that's going on in the M&A space. So we came back here in September. Our initial programming today is going to be rescheduled for another date to be determined. Our talk today was going to be about due diligence to integration with our special guest, Mackenzie Childs. So that's going to be rescheduled to a future date. So stay tuned. I did want to share some insight on due diligence and getting the business ready, and even prior to due diligence, because the due diligence process validates everything that you have shared previously when you're bringing a business to market. And most of the work is done in the beginning, right? I usually get this question a lot, when do I plan my exit, right? When do I start preparing my business for sale? And, believe it or not, you want to do that from the very beginning, from the day you started, bought, or inherited the company. You want to figure out what your exit plan is. And there's two things that I believe that's most important in getting a business a very good valuation. One of them is you as CEO, have to figure out how you can replace yourself, right? You want to run a company that can essentially run without you, right? You want to build out your infrastructure, build out your team. This is very important because a buyer is always concerned about the risk of either yourself not transferring all the knowledge you have to him or her. There's a lot of information you as a business owner have. If you've run a business for 20, 30 years, it's a lot of information that you have between your ears that needs to be documented. So documenting your process and finding things that you can take off your plate to delegate, right? Build out your team, build out your VP of operations and so on. Most buyers want to make sure they have some sort of a management team in place and that business can run, without you. They want to know that you're taking vacations, that you're able to step away and the business can still run successfully, whether you're there or not. That's very important. Empowering your team members. One key thing is making sure that you have the right people in the right positions. So evaluating your staff. You may have some awesome personnel that, however, they may be in the wrong seats. You want to make sure that you have the right people in the right seats and your company is running really efficiently, right? And you have all your processes in place and all documented. That's the first key thing I want to say that's important. I can't say how many times I get questions from buyers, want to know information about the key personnel, who's staying with the business, what's their experience, what's their expertise, is the owner tied to the business, is the owner, how many hours is the owner working, and so on. The other most important thing is the profitability. Especially in these times, we have some interest rates increases and the cost of capital has gone up. So that makes it, the cost of a buyer purchasing your business has been inflated a little bit. So it affects their margins to an extent. You want to make sure your business has enough of a spread, enough margins. The buyers want some more room for error in the event that the business, there's a turn in the economy or you lose a big contract. Getting your business as profitable as can be is important. Buyers are comparing your business to other businesses, and you want to make sure that your costs that's associated with running your business is at the level for your industry or lower, right? So benchmarking is very important. So your cost for your labor, the cost you're paying for your goods and services, your utilities and so on. You want to make sure that you are getting the best prices for your materials and whatnot. And then, also that you're providing products and services at a price point that's generating enough of a margin for you, right? So that's very important. Last week we did a session on profitability. I'm sorry, not last week. The last session we did was on profitability. It's about 3 weeks back. I will share the link, and we went more in depth into how you can make your business more profitable. So I highly recommend you doing that. Apart from those two quick tips, I also want to share that for you to get the best value for your company, there's three things that you need to consider. Um, the first one is your business ready for sale, right? There's a lot of aspects to a business that need to be improved prior to going to market. A lot of things that you need to review, because this is going to come out in due diligence, right? We spoke a little bit about your team and your infrastructure, right? You may have some outstanding legal issues, right? So everything from a legal perspective, your contracts, your leases, your contracts with your vendors, contracts with customers, making sure you have the right permits to operate. And yes, it does come up where I've had clients where we found out that there are certain permits that were needed that they just never knew they needed to have to run their business. So making sure all of your legal documents, your corporate documents are in place. You also have to review your financials, right? Making sure you have clean books, clean records. You can't get away from that. Making sure you have clean numbers. When it comes to due diligence, the buyer wants all of the information, full package. We are going back, when we take on clients, we're going back 5 years now. We used to do 3 years. Now we're doing a 5-year look back. So you're talking about all of your tax returns, 5-year tax returns, financial statements, so your profit and loss statements, your balance sheet, and then your year-to-date financials as well. We also want to take a look at your payroll records, and then breaking down your customer concentration, and we want to know what percentage of your customers generate X amount of revenue. It's very important. Understanding how you make money, and making sure everything is documented, right? The entire process, as far as your P&L, everything is checked on, all income is booked as it should be. Then you have your operations as well, making sure you have agreements in place with your employees. Sometimes, in some cases, you may need to have some stay agreements, because if you have some key personnel that's important to the business, it's very important that you have some agreements that maybe some performance incentives for them to stay longer and work longer in the business. So if you work past, let's say, 12 months, you get a certain bonus, and so on and so on. I had a conversation yesterday with a client with a new engagement we just brought on. I'm going to bring it to market in a few weeks. Excited about that. And that's one of the questions that came up. When should I speak with employees? When should I let them know that we're going to be looking to sell the business? And when it comes to confidentiality, no one needs to know that the business is for sale. Employees, definitely not. Vendors, customers, competitors, that has to remain private. Typically, how it's done, you can get your employees under agreement. They don't need to know that you're selling the company. It's just, you should have contracts in any case with your employees, so they know what their terms of engagement is with you, as far as whether they're an independent contractor or an employee. They want to, the buyers want to make sure that employee is going to be around. Obviously, you can't guarantee it, but if you have some stay agreements and some performance incentives for them to stick around, it does help. And that can be done without letting them know that you're selling the business. So yeah, making sure your business is ready. That's a big one. I would say part of that process is getting a business valuation. That's one thing that we provide here at the NYBB Group. We can provide a business valuation for you or for your clients. You want to know what your business is worth, right? Most business owners have spent a lot of time building up your name, your credibility, and that legacy, and you want that legacy to continue. We want to make sure that the lifestyle you've had for yourself and for your family can continue after you sell the business. And the only way to do that, you must first start with that valuation, right? So depending on the value of the business, you can figure out what's the next steps, right? Does it make sense to me to sell the business at the valuation I received? Or should I work to improve the business and start going down an exit strategy or exit planning process? That's something else we can also help with here at the NYBB Group, is putting together a plan for you to sell your business at a later date at a higher valuation, right? So that valuation is definitely the first step in making sure your business is ready for sale. So that's step one, right? Making sure that, reviewing the business, making sure the business is ready for sale. The next part of the process is the market, right? Is there a market for your business, right? Is the market ready for your business? You can have a great business, great products, great services, great infrastructure, a business that's been around a long time, have a lot of loyal customer base, all the good stuff, recurring revenue, and so on. But is the market ready for your business? And what that means is there demand for your products and services in the long term? So there are cases where businesses have been very successful, however, they have failed to innovate. And there are many stories like that, right? The Nikons of the world, Kodaks and so on. There are companies that have had a long history, had a lot of success. However, they were not as forward thinking, and whatever circumstances be, they're no longer able to operate. They either filed bankruptcy or went out of business. Great company, but there's no more demand for their product. So a lot of factors you want to look at. There are internal factors, and there are external factors that factor into that. So there's things that you may need to do internally with your business to make it ready, make the business more attractive, and there are external factors. So there could be regulations that are coming on the pipeline. Your products may be obsolete. You may need to invest in more equipment. If you're a manufacturing business, you may need to invest in more equipment so you can be more efficient with your process, and so on. Your market may be more shifting to more technology focused. You may be even carrying too many employees on your payroll. Once consult with a company with that, they were a manufacturing company, and they were ebbs and flows in their revenue, but they kept the same number of employees year over year. And when business is slow, sometimes you have to make some cutbacks in some cases, or switch your model up a little bit as far as how your hiring processes goes and retaining employees. You may want to have a base full-time staff and of mechanics, techs, whatever your business is, and then add seasonal workers or 1099s just to fill in as your business as it get busy. So there are cases where companies that have kept employees in W-2, and unfortunately, that's created a negative effect in their cash flow. So is the market ready for your business? Are there buyers looking for businesses like yours? Who the major players are, right? So it's good to be successful in a niche, which is great. The more you niche, there's actually less of an interest in that particular business. So it's almost like a catch-22. It's a good thing you've been successful in a specific space, but if there's no interest to invest in that space, then you run a risk of not getting a high valuation or not even selling your business at all. So sometimes it's okay to pivot. It's okay to adapt. Make your business more attractive. Maybe add in some product lines, whatever the case may be, to expand your business and make it more attractive. So the first thing is your business ready for is your business ready for sale? Is the market ready for your business? Is there a market for your business, right? So understanding the marketplace as it stands as a whole, who's a good fit to buy your business. Buyers can come from the private equity space. They can be strategics, or they can be individual buyers that may have some knowledge in your space. They may have worked for another company. I have a lot of buyers that come to me. We call them corporate refugees, right? They have worked 10, 20 years helping a company, making that company successful. And then you get to a point where, I want to have some, I want to have, the opportunity to have a business that can become my own, build an asset that can grow. There are people that have been laid off, and you kind of want to have control of your own destiny as far as supporting yourself and your family and whatnot. So you've seen a lot of people that are looking to transition from the corporate environment to owning a business. So we want to explore the entire landscape. So between the three sectors, the strategics, which are companies that are looking to grow through acquisition. It can be a direct competitor. It can be an indirect competitor. It can be a supplier of yours. It can be a customer of yours. So if you're a fabricator and you're a job shop, the materials that you're purchasing, your raw materials, that can be a buyer for your business, or it can be that developer, that architect, that company that purchases your product. They can also be a buyer for your business. So you have vertical and horizontal integration as far as acquisition goes. So you want to understand that landscape, who's the best fit. And I tell my clients all the time, is not always the highest price is the best fit. The buyer has to be a good fit for you as a seller, because you're going to be married to this buyer for a period of time, right? It is going to be a transition process where you have to help this buyer get acclimated to your business, your processes, and how you run your business, introductions to customers, clients, vendors, and so on. And also, most of our clients are family-run business, privately held businesses. A lot of the employees are family, right? You've seen them have their kids grow up, and now their kids have kids, and especially if you're a second, third generation company, you've seen this life cycle. So you don't want someone to come in and disrupt that too much. In some cases, there are clients that, hey, you know what, I feel great about what I built. I'm just ready to cash out, and I'm going to use this funds to support my family's needs, or I'm going to donate. I'm going to do some donate to a charity, whatever the case may be. I've already contributed what I can to the small business community. I've built a great business. I'm burnt out. I'm ready to move on, and they may not have that much of emotional connection to the business. But majority of the time, most sellers want to make sure that the employees are taken care of, their clients, their customers are taken care of, and what they have built can continue in some capacity, right? So finding the right buyer that can support that is important. So sometimes you may consider taking a lower offer because of that. Also, when it comes to deals, there's a price and there's the terms. So the terms may be more attractive than the price. So, for example, if you're selling a business for 10 million and you want 10 million, buyer may offer you 10 million, but the terms of when and how you get that 10 million may not be as attractive, right? There may be some sort of earnout. You may get paid over a longer period of time, and so on. Or it can be where you get your terms where you get majority or all of your cash up front, however, at a lower price point. So not 10 million, maybe 8, 9, 6 million, whatever the case may be. So you have the price and the terms, right? So there's a lot that you have to consider. So we spoke about getting the business ready for the market. We spoke about, is the market ready for your business? And the third one, which in my opinion is the most important one, is are you, Mr. Business Owner, Mr. CEO, are you ready, right? Are you ready to exit, right? This is, an emotional roller coaster. And for those of you that are listening that in the M&A space can relate to this, right? There's a lot of ups and downs when it comes to selling a business, right? There's a saying that if the deal hasn't died 7 or 9 times, then it's not a deal, right? There's always something that's going to happen all throughout the process. You get an offer, you get excited, the buyer walks away. There's so many moving parts, and sometimes it's really hard to predict. That's why doing your homework up front is so important, so you can minimize any risk in the back end, right? So we talked about getting a business valuation. Another report that you may want to consider getting is a quality of earnings, right? So you're having a third party, a competent CPA firm or business valuation firm do a quality of earnings report, right? To review and validate um, all of your numbers that you present for your business, right? Some buyers will accept that they do their own quality of earnings, but if you have one from a reputable company, it just makes the process much simpler. Um, Having your processes documented, having your employees under contract agreements in place, have an employee handbook. One thing I didn't mention as well is showing the upside potential for your business, right? Uh, Buyers want to see because they're going to pay for your business what your business is worth up till today, right? Any growth, any upside is their benefit. That's their return on their investment, right? From the time they close that contract and they buy your business, their goal is to grow this company, right? That's where they're going to generate the real profits and real return on the investment. So whether you're looking to sell now or down in the future, as a business owner, you always want to keep your foot on the gas, right? You always want to keep going, keep pushing. You want to have some sort of a growth plan in place, right? A growth plan that breaks down, okay, year one, these are my goals, and this is how I plan on accomplishing it. Just mapping that whole thing out, and you can have something like that ready and prepared for a buyer. At least giving the buyer some sort of framework, right? So you, Mr. Business Owner, if you were 10 years younger, if you had some more energy, if you want to, take another shot at growing this business, what would you do to grow the business, right? You have to be able to answer that question, right? And break it down, right? So many of you have heard of a SWOT analysis, right? What are the strengths, weaknesses, opportunities, and threats in your business? So the opportunities, what are the opportunities in your sector, right? For your business, right? What can you do to create some what opportunities are available for you to create some more revenue and profits down the road, right? So you have to have that. So the due diligence process, how I start off this session is it has been grueling. Depending on the size of the company, like normally due diligence, when I say normally, nothing is normal anymore. Prior to COVID, I would say the average due diligence period is 45 days. And due diligence meaning that from the time you accept an offer, the buyer is going to review your business to validate everything you have shared to justify the purchase price of your company, right? They're going to review, they're going to do their financial due diligence, legal due diligence, operations, and so on and so on and so on. So you want to get all this information done up front, and it can be grueling. So that emotional process I was speaking about, it can be minimized if you have actually done all of your homework up front. But with that being said, it's still a very grueling process. And you, Mr. Business Owner, you, Mr. CEO, are you ready? Typically, it's three things when I sit down with clients. It's three things I want to evaluate with them, right? So if there's family in the business, so a lot of times, clients come to us last minute. Of course, they come, they hear them, hey, Kyle, can you help me start my business? And that call probably should have happened 5 years ago, right? Because you want to put some things in place and make sure that you're getting the full value of your business. But usually they call when it's a trigger, right? Either there's a health issue, there's a birth of a grandchild. They want to be close to the grandchild. Their kids moved to another state. They want to be close to the kids, right? And this, general burnout, just want to retire, and pretty much just had enough, right? It's very stressful going through this process and selling a business. So one of the factors that we want to key in is like, what's your legacy? What's a legacy that you want to leave behind? What's the legacy you have created? And what's next for you, right? Having these conversations is important. A lot of times deals fall apart because sellers have I'm speaking primarily to sellers now, and everything I share is actually in reverse of buyers. There's risk on both sides, there's emotions on both sides, all across the board. But for this particular talk, I'm talking to business owners that are contemplating um, selling their business. So lost my train of thought. But as far as the legacy goes, sellers, yeah, that's what I was going. So a lot of sellers have what's called a mistaken identity or identity crisis, right? So Mr. Plumber, Dr. Smith, like you've been Dr. Smith for the last 20 years. When I sell the business, I don't have that connection anymore as being Dr. Smith. Like I've had some sort of status in the community. People come to me to help me fix their car, to help them do their landscaping, and this is who I am. And who am I? Like what I'm going to do now, right? These are like legitimate questions. And sometimes it takes a while for business owners to evolve. But hey, you're not just Dr. Smith. Like you have so much knowledge over the years that you've gained. Like you can now take that knowledge you have gained now and actually help others, help other doctors, help other landscapers, build out a course, help your kids with their endeavors. We've had clients that have supported their grandkids with the proceeds of their business to support them in their efforts. It's like there's other things you can do that can build a more fulfilling life. And just all the think about all the fun things that you didn't get a chance to do while you were working, right? Most of our clients are just chained to their business, right? They go to bed at night thinking that one day they're going to sell the company, but they wake up the next morning having to know that they have to, collect all those outstanding monies, right? They have to deal with all of the bill collectors. They have to deal with the issues in the workplace, right? They have to deal with other competitors trying to poach their customers, and so on. It's a lot, and I know it. I'm a business owner myself. I've been an entrepreneur almost all my life, and I can relate to that. And I work with a lot of private health companies, and these are a lot of the challenges that a lot of businesses have. These emotions can be very, very stressful. So I recommend a lot of times my clients, to seek some professional help, a sounding board of such, someone that can help advise in certain circumstances, just to keep everything level. Make sure those emotions are in check. It's very important. Self-help and wellness is very important, especially when it gets to deal making. Everyone is stressed. The attorneys are stressed. The CPAs are stressed. The deal makers. There's a lot at stake here, right? Most of my clients, their business is their largest asset, right? And it's one of the biggest transactions they're going to do, apart from, seeing their kids married, or selling a house or buying a house and so on. It's a big decision. So the legacy is very important. There are different ways that you can use the legacy you have built to create more fulfilling life for yourself and your family. So think about all the stuff that you wanted to do that you never got a chance to do: play golf, go fishing, and so on. The other thing that I like to talk about a lot is the lifestyle, right? So we spoke about the legacy, we spoke about the identity crisis, the seller remorse. All these are real life things that happen. The lifestyle. So there's a lot of perks in being a business owner, right? You have created a great life for your family, and for your employees and so on. Will you be able to maintain that lifestyle post sale, or would you have to cut back on some of the things that you were doing previously? And the goal is to build a business that's so successful, and you get a premium or the right price for your business, so that you can actually make some plans. And it's so important to sit down with a financial advisor, a wealth manager, to make sure that the proceeds that you get from the sale of your company, it can be used wisely. You can invest, put them in good vehicles, and create a plan for you to support yourself post sale. So make sure that you're maintaining the similar lifestyle even after you've sold your business. Many business owners have put their kids through college. They've had a nice lifestyle, at country clubs and travel with the family and all of that. Will that continue? Will that stop when I sell my business? We'll have to make cutbacks. So that's why, having these plans done ahead of time can alleviate that stress, because everything is mapped out. You have a plan that's in place. So I'm gonna leave you guys with that. Hey, thanks, Gary. Appreciate the feedback. Thanks on the great content. If any questions, you're welcome to share it now. We have a busy Busy week. Yesterday, I was in the city with the New York Association of Business Brokers with my good buddy, the president of the association, Greg Carafallo, and we had some folks that visited from Australia, talking about some great tools that brokers can use in their business. But we have a lot that's happening. Uh, Always have some stuff going on. Next week, we're going to be in upstate New York. I'm going to be talking about how to make decisions based upon metrics and not emotions. Right? We have a speaker. His name is Ezra Firewalker, and I'll put the links in the chat so you guys can tune in. My goals. We talk about legacy. So even though what I do is sell businesses, my legacy is to give back. I want to be a resource. I am a resource to business owners and providing education for them to help them grow their business. So any and everything I do is about empowerment. Everything I do is about the entrepreneurship movement, and helping entrepreneurs and business people, helping people become entrepreneurs and helping entrepreneurs actually exit at a price point on their terms and their price. So through my company, M&A Network, is our 5th year in business. We provide a lot of educational programming for business owners. We do masterminds. We have CEOs that meet with us on a monthly basis. We help them with their challenges in their business to help them become more profitable, help them put themselves in a position so they can either exit their company or buy another business. So next week, we're going to be talking about metrics, KPIs, and so on. I'll put a link so you can tune in. The following week, we're going to be in Manhattan. This for a social gathering of sorts. We're going to have some investors, private equity groups. This event is sponsored by Live Oak, which is the #1 SBA lender in the country. We're going to have some investment bankers and some VC and business owners at this event. Great for you to come out. And then I want to have one of our PhDs, psychologists, Dr. Miller. I'm going to talk about preparing the next generation to run your company. Succession planning is very important. It's often overlooked. Us business owners, we are always, going, and we fail to take a step back and plan, right? And start nurturing the next generation. I always get excited and fired up when I meet a company that's like 5th generation. And I share this all the time. I tell folks, like, you never ever want to sell your business. It's like real estate or the stock market, right? You want to keep growing. Your business should increase in value and it should increase in profitability and revenue year over year. Like, why sell it? So if you have a family member, you have a long-standing employee, there's opportunities to actually, you, Mr. CEO, take some chips off the table, step down as CEO, have someone else run the company, and just keep that going. In a lot of cases, that's not the case. That's why I hire firms like mine to come in and sell their business. But legacy is important. So Joseph asks, is there a place organization to start building your business to sell in 5 to 10 years from now? So yeah, I would love to help you out with that, Joseph. So we have an exit planning service that we provide. So essentially, we help you figure out what the gap is. So, for example, the first step is evaluation. Okay, Joseph, you do the evaluation first. So just hypothetically speaking, let's say the valuation comes back, your business is 5 million, and we always advise, like, I want to know when I take on a new client, I want to know who your CPA is, I want to know who your financial advisor is, and your attorney as well. And it's important because that number is just a number, right? There's going to be some tax implications as well. And we also talk about the tax planning and how to work upon planning what your lifestyle is going to be post sale. So once you figure out what your net proceeds are, so let's say the business is a $5 million business, there's some taxes and so on. Let's say you get 3.5 million, whatever the number is for that business. When you sit down with your financial advisor is going to tell you, hey, Joseph, you're going to need 10 million from this business, right? In order to sustain the same lifestyle you have when you were working, right? So let's say there's a $5 million gap and you want to sell in 5 to 10 years, what can you do to narrow that gap? So One way to narrow the gap is to cut back in your lifestyle, which nobody wants to do, right? Everyone wants to, want to fly to Miami, you want to take the kids out, do fun things and whatnot. No one wants to cut back in their lifestyle. The only other way is to increase the revenue and to grow your business. So we have a program. It's a monthly program where we keep track of our clients. There's different metrics in your business that we keep track of, and you give you a game plan as far as what needs to be improved. As far as growing your business, you can get to 10 million. I do have some advisors on my team on M&A that are certified exit planners as well. They will do a more in-depth assessment and implementation. So if you reach out to me later, I'm happy to have a conversation to help you with that. But there are many places, and this is one that there are many places that provide these resources, Joseph. And we happen to be one of them, and we like to think that we're pretty good. We are pretty good at it. I think that's it for now. We do have we'll be back again next week, Wednesday. So this LinkedIn Live, we're currently streaming on YouTube, Facebook, Twitter, and LinkedIn. So we'll be back to our regular program. So it's going to be every Wednesday. Usually start anywhere between 9 to 11. So if you want to just make a note of that. So it depends on the speaker availability, on their schedule. If you are, I like meeting business owners, right? I love meeting business owners, entrepreneurs. If you are a business owner, you'd like to come on my program, just reach out to me. We'll schedule a time for you to come and chat, because I love hearing stories. And maybe one of these days I'll share my story about how I got to the point where I'm at today. But I want to hear your story, because your story could impact the lives of others. I like helping people start businesses, growing businesses, and exiting businesses. So if your story can connect any one of those levels, starting a business, growing a business, or exiting or merging two companies, I want to hear your story. So that being said, we're going to close out. Joseph, thanks for your question. Gary as well. This recording will be available on my profile on LinkedIn. You go to my profile on LinkedIn and you click on events. That's where you find the recording, and a Facebook Live, it's there as well. With that being said, thank you again, and see you next week.